All right, everyone, welcome back for another episode of Carnivore Trades. Today is Tuesday, February 8th, 2022. So markets opening kind of weak here on the weaker side, a little bit of a trap candle and then a tail, pushed it back up here. And then we had a squeeze into the middle of the day. A lot of things were weak this morning. Semis were a little soft. Tesla had a big test candle here in the opening minutes. But financials kind of held the market up, and then we pulled back a little bit. And I mentioned this to the members in the community forum here, and I said, they faded this thing. If we look on the SPY here, the last couple of days, they faded it in the final hour and really kind of demoralized anybody who was kind of hoping for a rally here. And I said that look around 230 or so, they might try to fade this again, and it probably will result in a squeeze. So, anytime they do this, they put that on the tape twice in a row, they do it again. A lot of the time it's a trap. And that's exactly what happened here. Now spiders closing at the highs of the day here as we push up into the final minutes. We do have about 4 or 5 minutes left in the trading day. So a nice little bit of a kind of fake breakdown and a squeeze. And look at the squeeze happening here on the spiders as the VIX gets hit. Nice little reversal there on Tesla going to the close. Look at Apple. You're getting a bid. Semi's getting a nice push. Dow, and really everything across the board. So let's talk about the VIX a little bit. I said this on Twitter earlier. That losing that 22 handle was not a good look. So if we look in here, you can see it tried to hold on to that. It's kind of been holding that 22 handle for a few days. As soon as that broke down, that kind of gave way to the markets to rally. Now it's got to hold 20. So if it cannot hold 20, the gates, kind of the floodgates sort of come open here for a major squeeze, in the equity markets overall. Now, if we don't end up breaking out today, there's only 5 minutes left, so it's not like you can go that much higher. But if we don't, break out by tomorrow, then I would think the market's probably waiting on. You can see the volume dipping here. Really, the last couple of days, volumes dipped right down. We could see kind of a pause tomorrow. It's possible, and then we're kind of waiting on CPI, right? So CPI, we have that Thursday, and either way, it doesn't really change my outlook. I still think we're going to have another leg up here in the market. But a lot of the time, the CPI data can just be the excuse the market needs. So you'll see a CPI print, whether it's supposedly bullish or supposedly bearish. The market will react to it one way, and then the talking heads on TV will say, "Oh, it's because the market, likes this because of that." It doesn't really matter. It's just the excuse the market needs to do what it wants to do anyway, right? So it's possible that if we don't break out tomorrow, we could get a bit of a pause day, and then we'll reevaluate. Or it's possible that we could, head back lower off CPI. Maybe it's really bad and the market sells off. But I'm still in the camp that we have another kind of C leg up. So we had A, and then this is kind of our B here, and then I think we still get a C leg up. But that is just kind of my look here. Also kind of supporting that theory is the Russell is finally starting to shape up a little bit here. And that was also why I said that if they try to fade it a little bit in the afternoon, it probably wasn't going to work because the Russell was making higher highs. So that's 3 days in a row now that the Russell has made higher highs. And it is, it's starting to, inch into that 20 moving average. Now this 20 moving average is minor. The level you want to watch here is 203.90 on the IWM. If you can close above that, that opens the door to move back up to possibly 210, maybe 215 if we really ramp up there. But even as the spiders were pulling back here a little bit and starting to fade, the Russell had already made higher highs. So that was a good, positive for the market overall. And, the triple Qs were pulling back here, but that was a positive overall for the market. So the Russell has been finally starting to get in shape a little bit here. And again, that kind of supports the theory that we do have a little bit of, potential strength here moving forward over the next maybe week to couple of weeks. Not looking for anything major here, but again, I do think that we probably get some type of a bullish move here. Anyways, let's break down a few sectors. So look at the semis first. Semis with a nice day, up 2% here. Again, kind of making higher highs again with the Russell the last 3 days. Just challenging that 20 moving average. You have a gap to fill up here. You already basically kind of kissed the 100 moving average essentially. If you can get above that, then obviously your resistance is the 50. But really this level we're going to look for here is 280.55. So that would be last Thursday's high. If you can get through that, Then obviously the next level is 284, but I don't expect 284 to be too major if you can get through 280.55. But nice move there for the semis today. IGV, you want to just get above this pivot here. If you can do that, you can challenge 370, and possibly, you know, that might coincide with that 50 moving average there. But nice little move there for cloud software. Dow Transports. Again, we talked about this little pullback here. Now getting a little bit of a bid. Nothing crazy, though, up 1%. Transports are not really, you know, a leading sector right now. They're just not really showing a whole lot, but nonetheless, getting a bid with everything else. Home builders, you know, having a nice day finally, coming off the lows here. Again, I did say that they probably have put in a short-term bottom. VNQ was a little weak today, though, down 0.5%, and you know that is with rates higher again. So rates up another 2% here. 10-year finishing at 1.594, and the 30-year up 1.5 as well at 2.251. So nice little pop here. Now I think rates maybe a little, you know, may need to do some backing and filling. They're getting a little long in the tooth, very short term. So we could see a little bit of a pullback, and again, that could give tech a lift. You know, if rates come back in and, you know, retest this area here, that could give a bid to some of the tech stocks that have been beaten down. But that is also part of the reason why the VNQ and home builders have been underperforming lately. All right, so there's the closing bell. Spiders coming in off the highs a little bit here, so they did kind of protect it a little bit going to the close. We'll take a look back at that shortly. Let's look at the Dow really fast. Yeah, so that little trend line there I've got, it did get pushed down below, but we did make a higher high here. Looks like we made a higher high here on the Dow. 355.22 is our high from last Thursday, and we just took out that high just a little bit. So next level there on the Dow is 356.66. If you can get through that, you know, you probably come up and fill this gap, maybe get up to that red bar high there. So those are the levels there on the diamond. Then let's flip over XLF, nice powerhouse day. This was helping the spiders this morning. So notice the spiders, that weak open we talked about. XLF was just strong all day. JP Morgan had a really strong open, did come back in a little bit though. We talked about this gap fill, and that's right where it went. So it filled that gap and then pulled back off of that. So JP, maybe getting a little bit ahead of itself, but nice little move there, and that was helping the markets in the morning. Broker dealers almost up to the highs, 52-week highs. So again, financials have just been strong with that higher rate. So as long as that yield curve doesn't flatten out, financials can continue to hold up. XLE finally pulling back a little bit, down 2%. Same thing with the XOP, you know, down 3.2. And the OIH down 2% here as well. Nothing really major though. They just backed off a little bit. It's not like they broke trend or anything, but they are pulling back a little, as well as crude down just under 2% here. It's coming off the lows a little bit, but you see that trend line is giving it a little bit of resistance. But again, until this thing makes a lower low, it's just really tough. Energy is such a tough trade right now. But I believe there was some de-escalation that came out of Russia today. I think Putin said something, but that was kind of the story. So maybe that was a little bit of a catalyst for crude dipping back under $90 a barrel. But ultimately, that trend line is holding up for now, and we'll respect it. Nat gas didn't do a whole lot, down 0.5% here. Didn't take out yesterday's low, but didn't really do much else either. We'll see if, you know, the only thing to do with this is wait for a pattern. And it really has not given us any sort of pattern in quite a while. So nat gas just all over the map. Dollar index also kind of a nothing burger again today. This one just kind of hanging in there, not doing a whole lot. Gold, nice little pop again. It got above this level I gave you guys yesterday. So 1823. It's got above that red bar high. Now we can go up and test this high here, possibly this trend line. I want to see it make a higher high. If you can make a higher high here, that would be a positive here. So, but again, the real level here is about 1880. So until it gets through this, I mean, we'll not even worry about this right now. Let's worry about this area here, the red bar high and this pivot high. If we can get through that, then it's showing some strength near term. We talked about this a couple of times over the last few months about gold moving up with rates. And gold is green again today, and so are rates, and so is the dollar. So, you know, if these trends continue, there's something we have to monitor, because it's not historically what, you know, we're come to expect. But for right now, we'll just kind of leave it as is, and we'll just continue to monitor it. Silver up 0.5% as well. This still has to get above that 2362 area. So this one, you know, continuing with yesterday's move, but still below these three moving averages and still nowhere near challenging that high just yet. Platinum, nice little pop today. Love the pattern. It's setting up nicely. And this, you know, again, could get a pop to 1100. So nice little move there. Palladium, nice little kind of inside day. from yesterday's little test candle. I like that. Probably just needs to do a little bit more back-end filling, and then potentially can make another leg up. Copper, also a nice little hammer candlestick today as well. So if it keeps hitting on this area, maybe it'll finally break, but ultimately I'm still kind of in prove-it mode there with copper. But nice little move today. Bitcoin here. So Bitcoin was a little weak earlier on. It was pulling back. It is noticeably leading the rest of cryptos. So you see all this red on here, really just XRP and Bitcoin green here. Ether was down a little bit more, although getting a bid here. And Bitcoin came off the lows. So again, we're going to kind of look at this level here. This is the next major area. This trend line, that's kind of what I'm watching. We got a bit of a doji here, so we'll see what happens tomorrow. But, overall, Bitcoin kind of holding up, Ether as well. Got into that 3,200 area. That is going to be resistance. That's where you broke down from. But, if it can push through that, then maybe you can get up to 34, 35. But for right now, crypto's hanging in there okay. And again, this is another reason why I said, as soon as crypto started bidding up, I said, if that happens, that could be a good sign for equities in the near term. And, it looks like the market's holding up okay. And a lot of time, crypto can lead equities. So, if we flip back over here, we had this, crypto really started breaking down in November, right? And it didn't stop until pretty much the middle of January. And then we flip over to the spiders, started to top out around November, but then had a little last gasp up. Triple Q's actually topped out in November with crypto, but you can see how the Bitcoin kind of led the equity markets lower a little bit, and now that they're getting a bid, kind of the equity markets are getting a bid. So loosely correlated. Again, Bitcoin does trade like a leverage ETF sometimes to the equity markets, and when it holds up, that can be an indicator that the market wants to hold up. So just little things, tidbits to keep an eye on. Anyways, major levels here to watch over the next couple of days. This 452 to 453 area here on the spider. If you're following the triple Qs, it's 362. That is the high here from last Thursday on that gap down. If you get through that, you probably go right up and fill that gap. And that's going to be resistance in the near term. But those are kind of your levels there. And also make sure you're paying attention to the VIX. Again, if it loses 20, this market will rally. And we'll probably get a good short squeeze telling you that the hedges will be coming off. So just keep an eye out for those things. And obviously tomorrow, again, if we have a nothing burger and kind of another doji or a sideways day, that's telling you the market is waiting on the CPI print. Anyways, guys, take care. Thanks for watching. Like, comment, subscribe. Come visit me at carnivoretrades.com. And you guys have a great rest of your night, and I'll talk to you all tomorrow.